Okay, let's go ahead and work on the month of November. This time we will process November in live mode. In other words, we will book things as they happen, and we will print checks as we go, not post them post factum after we wrote them, but we actually will print them as we go and we pay bills. So again, let's get going. What is this? This is the owner taking money out of the bank, right? That's transferred to your personal checking. Multiple ways to do it. You guys already know that. We can always do it through general journal entry, but there's a couple other ways we can do it, right? So one of them, we can do it through expense module. Again, even though this transaction technically is not an expense, expense module allows us to do that. So we'll go ahead and use it, right? So here it is. We can go ahead and book it as expense again, even though it's not an expense, right? But that's fine. So again, whom do we pay? Owner, right? So we can essentially add it as new. All right, money is coming out of our bank account, right? Payment date, let's make sure it's correct. Oops. Okay, let's see. November 1st. Here it is. Payment method, wire. Bank transfer. All right. For reference, we can use transaction number. Okay. We don't actually need tags. We can just put something in the description. Okay. So here it is, member draw, right? And here we can put it. All right. So here it is. Again, we can just type it in here. So let's make sure we understand what's happening in terms of debits and credits, right? It's very important to make sure that we have a good handle on these interfaces, right? So one thing we know for sure that, our bank account will be reduced, and bank account is an asset, right? And assets are reduced when they are credited. So we can go ahead and book that one. Right, the other one is member draw account. Again, even though it's a little bit counterintuitive, but member draw account is actually an equity account, and equity is reduced when it is debited. Because we will close member draw account into the equity account at the end of the year, it will essentially reduce our equity, and therefore we're reducing it right now. So here it is, right? This amount right here, this 2,000, right? It's a debit to account 3,700, right? And at the same time, this account, it also shows up right here, right? It's a credit to account 11,100 right here, right? So we're gonna go ahead and save it. All right, save. All right, what do we have next? We have an invoice, right? So again, let's go to our dashboard, and we will enter, our invoice that we will pay later. This time, we're essentially entering the invoice in, essentially it will hit the accounts payable, not our bank account, not our credit card, because at this point we're just entering it, we're not paying it. Very important element. So let's go ahead and add it. All right, so vendor, here it is, to go packs. All right, terms net 15, great. Let's change the date. All right, so it's due bill number. Okay. And it remembers restaurant supplies. We just need to update our bill number. Okay. And we need to update the amount. 158. Okay, so what's happening here? And let's update it in the memo box. So what's happening here, right? A very important element to understand. At this point, after we book it, it will not impact our bank account. It will not impact our credit card account. So what's being impacted? Well, one thing we know for sure that we can see here, right? It's impacting our expenses. Expenses go up when debited, right? So here it is. Debit 6100 right here. Right. What else is happening? Well, we got to have a credit, right? You can't be without credit. You can't just have debit. You got to have a balance right here. So what's being impacted is our accounts payable account. In our case, it's 2100 and it's being credited. Even though you don't see it right here on this interface, it's there. It's implied. Again, I wish they showed it, but they don't for simplicity, I suppose, to make it more user-friendly. Nevertheless, it's there. It's important to understand because when we pay, we will not touch the expense account. We will only offset the accounts payable, right? So anyway, here it is. We're entering this bill. Save. Back to this. What else? We have another bill to enter, right? Okay. New date. Date is updated. Thank you. Correct. 25. Let's enter bill number. Alright. And we can copy and paste it everywhere. Again, so it remembers all the expense line items that we previously used. So let's make sure everything is correct. What do we have here? So 1,000 for rent, correct. 150 insurance, 50 dues and subscriptions. Okay, this one is going up, repairs and maintenance, right? So let's update this, very important to check. And then what else? Advertising and promotion, 95. So we should have a total of $1,385. $1,385. What's happening? All right, you know by now, but let's make sure we cover it. So we know that our accounts payable, again, remember, accounts payable is going up. At this point, we're just booking this invoice into our accounts payable. We're not paying it with our credit card. We're not paying it with our bank account, right? So let's reflect that. Our accounts payable is 2,100. And what's happening with it? It's going up. Accounts payable is a liability. Liabilities go up when credited, right? So 385. Here it is. What else is happening? Well, we have all these expenses going up. And this is, by the way, where the difference, some people ask, well, what's the basis, what's the difference between accrual and cash accounting? Well, at this point, like after we book these expenses are actually taking place on accrual method, but not on cash basis method. So if you are cash basis taxpayer, you would not be able to use these expenses as deductible because you haven't paid them with your bank or your credit card, right? So again, at this point, these expenses will exist only on accrual basis. That's just kind of a side comment that I wanted to share. Anyway, let's go ahead and see which expense accounts are being impacted. Here it is, right? They're all right here, but it's important to remember that we have good handle on it. Alright, what else? Alright. And there's one more. Okay, see they're in balance. Debits and credits are in balance right here, right? Accounts payable being a liability, it goes up when credited. All of these accounts, they're expense accounts right here, they go up when debited, right? So our expenses going up, our liabilities go up. Once we pay off this liability, these expenses will be recognized on cash basis, right? But when we pay it off, we will not impact these accounts. That's kind of a nuance between, again, cash basis and accrual basis accounting. Anyway, let's go ahead and book it. Okay. Okay, we have another invoice. Okay. Let's adjust the date. Alright. Alright, 184.56. Let's make sure we're reflected. Again, we're booking it into accounts payable, right? So what's going on? Our accounts payable, all right, is going up. It's a liability. Liabilities go up when credited. Okay, what else is happening? Well, our expenses going up. And they're going up right at this point only on accrual basis. Right? Once we pay it, it will go up on cash basis as well. All right, here it is, debits and credits are in balance. All right, this amount right here is a debit to this account, 6,400, right? And this amount, which is the same, but it's summed up right here, right? It is a credit to account 2,100, even though it's not shown here, right? It's behind the interface, but that's what I want you to understand. That's very important to be able to see the mechanics behind the interface. That's what separates good accountants, good bookkeepers from great ones, right? So here we go. Have another invoice. Okay, let's adjust the date to 5th. Alright. Okay, quick purchases. Here we are. Again, we're familiar, but let's solidify what's behind this interface, right? Let's switch up just for kicks and giggles, right? Expenses going up. Expenses go up when debited. Accounts payable are going up as well, and accounts payable being a liability go up when credited. Here, oops. Right, here is debits and credits are in balance. On this interface, they're in balance. They have to be. There's no absolutely other way, right? So here it is. This amount is a credit to account 2,100, even though you don't see it on this interface. It's there, trust me. And then this amount right here, right? It's a debit to account 6,200, and we can see this one. All right, so let's go ahead and book it. Okay, next one, we have a deposit, right? We made some cash sales, and now we're going to deposit it to the bank. QuickBooks Online, unfortunately, again, it tries to be a super user-friendly. Unfortunately, it gave up some of the functionality in the process. So even though you see this button right here, receive payment, technically, the only way you can work it is if you previously create an invoice to your customer, which in this case doesn't quite work, right? Because you kind of tell them how much is due for that or this food item that you sell out of your food truck, and then you collect cash, and then you take that cash to the bank. So how do you essentially reflect that deposit, right? Some people are confused about that. Well, general journal entries, right? They are our best friend, right? In this case, accountant's best friend. So accountant's tool, general journal entries. You can do whatever you want with this beauty. Anyway, so here it is. What is it? That's going to be our cash deposit. Okay, so here everything is straightforward, right? We have our debits, we have our credits right here, so let's go ahead and book it. So first of all, what's being impacted? Our bank account, because we're putting money in the bank. Bank is an asset. Assets go up when they are debited. Right. What else is happening? Well, our sales are going up, right? So here it is. Sales / revenue go up when they're credited, right? So we don't even need to reflect it here, but we could just to solidify the knowledge. What's happening? Our bank account 11,100 is going up, has to be debited. What else is happening? Our sales, right? The source of that money is sales. So sales have to go up, and therefore for sales to go up, sales / revenue go up when they are credited. So here it is, they're in balance. We can go ahead and book this cash deposit. Okay, next we have an invoice. Let's go ahead and book that one. Yeah, we can do it through add bills. All right. Alright, here it is, bill number. Okay, it's utilities. Here it is. Let's make sure amount is correct. 391.35. Okay. Here it is, right? Again, what are we impacting? We're impacting our accounts payable. Alright, accounts payable is a liability. Liabilities go up when they are credited. Okay, what else is going up? Our expenses go up. Again, side note, they're going up only on accrual basis right now. Once we pay this bill, then they'll go up based on cash basis. However, please note, once we pay it, we will not touch the expense account. We will only touch the accounts payable account. Okay, here it is. Debits and credits are in balance, right? This amount right here, it's a debit to account 63,100, and this amount right here, it's a credit to account 2,100. Even though you don't see that 2,100, but you know, I put it out for you here. All right, one more invoice, right? So again, let's enter it. They all enter through add bills. Pretty straightforward, but we want to solidify that knowledge. Okay, so here it is. Beginning of the month, right? The invoices are coming in. Okay. Alright, same thing, right? But let's switch it up. Expenses going up, expenses go up when they are debited. What else is happening? Accounts payable is going up. Accounts payable is a liability, it goes up when credited. Here it is, debits and credits are in balance. This amount right here, it's a debit to this account, and this amount right here, it's a credit to 2,100. All right, we're gonna pay, right? Finally, we're paying some bills after entering them all, right? So we're gonna pay soft drinks bill, right? And we're gonna pay it with our credit card. So let's go ahead and pay bills, right? So which one? Soft drinks right here. So we're gonna pay this one. All right, so payment right here. All right. What are we gonna pay it with? Right here, you see we selected the bank account, but that's not what we're going to use. We're going to use the credit card, all right? And then the payment date, you know, make sure we select the correct one. All right, so here we are, almost set. Let's make sure we fully understand what's happening, right? So at this point, expense accounts will not be impacted. We impacted them when we booked it. Okay. However, recognition of expenses for tax purposes will take place, right? So they will move from being accrual basis expenses to cash basis expenses, just a side note. But in terms of bookkeeping, in terms of accounting, right, we will pay down our liability accounts payable, right? So here it is. And what else is happening? We'll incur another liability, and in this case, our credit card, right? Okay, here it is, right? Debits and credits are in balance. This amount right here, right? It's a credit to account 21,100, right? This liability is going up, and liabilities go up when credited. But it is also at the same time as a debit to account 2,100 to our accounts payable account, and it's also a liability, and liabilities go up when debited, right? So we shifted from one liability to another. All right, so we're going to do, see right here it says schedule payment online. Now we already did the payment, we got that receipt, so we're just going to save and close. All right. We're going to print some checks. All right, so next one is we basically will print a check, utilities to go, and we're going to pay it with a check. So all right, pay bills. So previously we paid it with a credit card. Now we're going to pay it with checks, and we're going to print that check, right? So we have this blank check. Let's make sure you can see it better. Okay, so we have this blank check, right, that we will put in the printer, and it's utilities to go, right? And in this case, we're going to pay it with our bank, and we're going to click, print it later, all right, to print, so that we can see how it's happening, right? And then we will, all right here. So what's going to happen? Well, once we print the check, this transaction will take place. All right, our accounts payable account will be reduced, that liability will go down. And our bank account, it's an asset, right? And assets go down when they're credited. It will go down. So both our cash, our bank account cash is going down, it's credited, but we're using it to pay off a liability, accounts payable liability, so that liability is reduced. So this amount right here, all right, it's a credit to account 11,100, and it is a debit to account 2,100, even though you don't see it. And see, we're going to print the check, right? So save and close. Okay, so now we have to go and print this check, right? So because we clicked print later, so until we print it, this transaction technically will not be booked, right? So let's go ahead and print it. The way you do it is you do it through the expense module right there. All right, so here it is, right? That's our amount, recognize it right there. So go ahead and print checks. Okay, so here it is. We're going to enter this blank right there. All right. Starting check, important to enter it, 1031. Okay. Bank account, correct. All right. All right, let's go ahead and preview and print. Here it is, looks good. All right, so the check would print at this point, right? And we would go ahead and make sure it correctly. If not, we can go through these steps, and we're done, right? And we would get this check. Okay. So at this point, this would take place, right? So once the check cleared, it would reduce our bank account, right? Account 11,100, and it would reduce our accounts payable account 2,100. So here it is. All right, let's go back to our dashboard. Okay. We have another cash deposit, right? So we just did that one to make sure that our account is not overdrawn. Again, with cash deposits, the only really easy way to do it is through general journal entries. So let's go ahead and do that. Okay, so make sure the date is correct. Okay. Alright, so what's happening? Bank account is going up. And the reason it is going up is that our sales are going up. Okay, so here it is. Alright, let's reflect it on our debits and credits sheet just to solidify the knowledge. So what's happening? Our bank account will go up. Bank account is an asset. It has to be debited to increase. What else is happening? Our sales go up. Sales/revenue go up when credited. So here it is. Debits and credits are in balance, and in this interface, the beauty of general journal entries, you can see it right here, right? So we took this cash to the bank, deposited it, and here it is. Alright, so then we have some receipts, right? So expenses on with our credit cards, right? So we used our credit card to fill up our food truck, right, with some fuel. So let's go ahead and book that. We could book it through a couple of steps, right? We could add bill and then pay it through the credit card, which is, a little bit unnecessary. Let's go ahead and just book it through the expense module. It's probably one of the easiest ones. So you just go, expense. Here it is, right? Again, see, it remembers that it works with the credit card right here. Date, okay, picked it up. Payment method, credit card. Alright. And the amount is, okay, here it is, right? So we know by now how it works, right? But let's make sure what's happening. Our credit card is a liability. Liabilities go up when credited. We owe money to the bank for filling up this truck. What else is happening? Well, our expenses on fuel just went up because we bought some fuel with it, right? So here it is, debits and credits are in balance. This amount right here is a debit to account 63,200, and this amount right here is a credit to account 21,100, right? So here it is. All right, we have another transaction receipt, right? What's happening here? Well, we paid food traders with a credit card, right? That's an invoice that we previously entered. So let's go ahead and go to our dashboard, and then we're going to pay bills. All right, we've done it before. Let's do it again. So let's make sure we paid with a credit card. Okay. All right, which one are we paying, right? We're paying, in this case, food traders. All right, we're entering full amount. Excellent. All right, so what's happening here? Well, once we process this payment, right, our accounts payable, because right now it's an accounts payable, will go down, right? And accounts payable being a liability, it has to be debited to decrease, right? However, we're paying it with a credit card, which is another liability. In this case, it's more tied to us as the owner. All right, so here it is. We're moving it from one liability to another, right? Accounts payable being a liability, it's decreased when debited. Credit card being also a liability is increased when credited, right? So here it is. This amount right here, it is a credit to account 21,100 right here, and it is also a debit to account 2,100, even though you don't see it right here. All right. So save and close. All right. Okay, we're also paying down another invoice from to-go packs with our credit card, right? So again, let's pay bills through this interface. To-go packs right here, credit card, excellent. Okay, full amount. what's going to happen? We just covered it. Let's cover it again. One liability will go down, in this case accounts payable. Another liability, in this case our credit card, will be increased, will go up by the same amount. So we're moving it from one liability to another, right? So this amount right here, it is a credit to account 21,100. This liability account will go up, right? At the same time, this amount right here is a debit to account 2100, which is accounts payable, which is also a liability, even though you don't see it on this interface. But that account balance will go down, therefore it is debited. Okay, next we have a transaction receipt. It's a bank transfer, so we're paying down our credit card balance using our bank account. There are multiple ways to do it, right? We could do it through general journal entry, which we've done before. We can also do it through our expense module. So let's go ahead and just do it through our expense module for kicks and giggles. So here we are, new transaction, pay down credit card right here. Okay, so here it is. It's a special interface, but we know debits and credits behind it. So we're going to select the credit card. Alright, pay is optional in this case. And how much do we pay? It's right here, 232307. Alright, date, correct. Alright, bank account. Right here. Okay. So the amount is entered once. However, it is both a debit and a credit. Let's make sure we understand what's happening. Our credit card account is a liabilities. Liabilities go down when they're debited. So here it is. Our bank account, 11,100, is in assets. Assets go down when credited. Okay, so here it is. This amount that we entered, right? It is both a debit and a credit, right? It is a debit to account 21,100 right here, and it is a credit to account 11,100 right here. So let's go ahead and save and close. Okay, back to our dashboard. Okay, next we have electronic funds transfer notice. Okay, that's money coming into our account from our merchant account deposit. So that's our credit card sales, right? So when our customers pay us with credit card, first those funds are transferred to our bank, and then bank processes those payments and transfer it to our bank account. All right, so the way we would book it, we would use our general journal entries, because unfortunately there is no easier way to do it in QuickBooks Online. But general journal entries is a great way to accomplish basically anything we want to accomplish. Okay, so what's happening? Our bank account will go up, right? It's an asset, therefore it has to be debited to go up. And what else is happening? Well, our sales, right? Because the source of this money is sales, so our sales slash revenue are going up, and those go up when they're credited. So here it is. Let's make sure we reflect it and we fully understand what's happening. Assets go up, right? Bank account is an asset, it has to be debited. What else is happening? Our sales are going up, and sales slash revenue, they go up when credited. Here it is. Debits and credits are in balance, and on this interface, it's right here. Very easy to see, so we're good to go. Okay, save. Okay. Next, we have ATM transaction receipt. Okay, so we withdrew some money, all right? Took some money out because we needed some cash to spend. Again, there are different ways to do it. One of the easiest way in this case would be general journal entry because we're taking money out. All right, so we're going to go again, accounting tools, journal entry. Okay, 16. Okay. Okay, in this case, again, we're impacting our bank account, right? So here it is, but unlike in previous case when it went up, this time it's going down, and being an asset, it has to be credited. What else is happening? Well, we have member drawer, right? It's an equity account. Again, it's one of those contra equity accounts like accumulated depreciation to an asset, but nevertheless, what happens, it's an equity account, and equity is reduced when it is debited. So here it is. Let's make sure we reflect it right here. Okay. Again, make sure we understand equity goes down because we're taking money out of our business. Makes sense, right? Our account balance, bank account balance, is also reduced, right? And being an asset, we credit it. So here it is, good to go. And click Save and New. Close it, doesn't matter. Okay. Here it is. Next, we have the cash deposit. All right. Keep using our general journal. Again, the source of this cash is our sales. So again, bank account goes up, has to be debited. And we, again, like I said, the source of this cash is sales, therefore our sales/revenue has to be credited, and therefore they go up. So let's make sure, even though it's pretty obvious here, we're going to reflect it. Asset goes up, in this case it's our bank account, sales go up. Right? So here it is. Account 41,100 goes up, and account 11,100 goes up because this is sales/revenue, this is asset, right? So here they are, they increased. So okay, we're going to print some more checks, right? So here it is. Check is going to pay clean depot, right? So we're going to pay some bills. Pay bills. Alright, so here it is. Clean depot. 184. Make sure we change this. Again, once we do it, this is what's going to happen. But until we print this check, it's not going to impact it, right? So again, expenses at this point are not impacted. Liability, in this case, being accounts payable, will be reduced. Liabilities are reduced when they're debited. Okay, what else is happening? Our bank account balance will be reduced because we're paying down this liability using our bank account. So that's what's going to happen after we pay it. Again, we're going to print this later. Make sure the payment date here is correctly picked out based on what we have. In this case, 11/20/2020. We're going to fool the system a little, right? We're not doing it right now, but yeah, we're going to print it later. Okay. And we can actually save and print right here. That's another thing. Bypassing, like, not like we did the last time, but this time it's kind of a little faster. Okay, make sure the check is selected. So we're going to insert this blank. All right, all good, checked. Preview and print. Looks good. Okay. Yes, printed correctly. Done. Here it is. Right. So this check would print, we would sign it and mail it out. So at this point, this transaction would be booked because what's happening is we're paying down accounts payable, right, 2,100, using our bank account, 11,100. Okay, then we have order receipt from our online market, and we use our credit card on that, right? So again, we could book it using various elements, using general journal, we could insert it as a bill and then pay it down using credit card. The easiest would be probably through our expense module in this case. And we would essentially enter it as an expense right here. Okay. Credit card, transaction 1124. And in this case, none of these apply. Well, actually, training materials, no. Advertising and promotion. I don't know. This looks like holiday gifts, holiday kids gifts, and wrapping paper. Looks more like a draw, right? I mean, unless I'm giving it to all of my customers, yeah. So again, in this case, we're going to change it to members draw. It's a personal expense. It's not tax deductible. We're going to enter the full amount. It happens, right? We use our business credit card to buy some items for personal use, such as, the Christmas gifts and wrapping paper. We just got to book it properly, right? So again, draw being an equity account, it's reduced. And liability account is increased. So let's book it. Make sure we understand. Again, equity is reduced when debited. And what else is happening? Well, our liability, our credit card goes up, and liabilities go up when credited. Okay, so this amount right here, it's a debit to account 3700. Our equity is reduced because we're taking money out of the business, right? Because we're borrowing essentially against that business and we're taking money out. We're going to use this amount for personal use. What else is happening? Well, our credit card balance will go up because we're not impacting our bank account. We're actually paying it with credit card 21100. So here it is. Let's go ahead and book it. Alright, what do we have next? Oh, we're going to print some more checks, and in this case, to big lease company. Okay, so again, we booked the invoice already, so now we just got to pay it. So pay bills. It's the only one left, right? So make sure the bank account is selected. Big lease, payment date. Make sure we change it to the date that we printed. I know it's in the live mode, but it's not entirely in the live mode, right? Print later is selected. Okay, amount is correct. Alright, we're still doing a simulation. Okay, so here it is. Now we have save and print. Again, we could print it later like I showed you earlier. We could schedule it online, but in this case, let's just save and print. Okay, so here it is. Check number. We would insert this blank, right, essentially. This blank check, number 1033, 1033. Okay, all good. Print and preview, right? Here it is, and it's going to print, and we're going to take a look, and here it is. It's printed well, all is good. Voila. What happened, right? I forgot to show you. Well, I'll show you right now. It's not a big deal. I got too excited, right, with all this. Well, we know the accounts that are being impacted, right? Alright, so these are the two accounts payable and our bank account, right? Bank account will have to be reduced by this amount, right? Here it is. And accounts payable will be reduced as well. So here it is, alright? Even though I already printed the check, here it is, right? We can see it right here. Alright. Okay, then we have transfer to personal. Okay, so we have another draw. In this case, it's not using ATM. We actually moved some money to our personal account. So again, we can use it journal entries. We could potentially use it with expense module. Either way works, but let's do it the simple way. Okay. We know that bank account will be reduced, so that's credited, very easy. We also know that our equity will be reduced. So, but in this case, we book it into member draw so we can track our draws, right? And then we're going to close it into equity anyway. So anyway, our equity is reduced, it's debited when reduced, and our bank account is reduced, thus it's credited. So here we go, we can show it right here. Here it is, debits and credits are in balance, right? They're in balance right here. Our equity 3,700 is reduced when debited. Our bank account 11,100 is reduced when credited. We're good. All right, next we have receipt from our gas station, right? So we went to gas station, filled up our food truck, and here we are, we got this receipt. So we're going to book it. The easiest way to book it probably would be through expense module. Okay. Credit card, all good. 1125. Reference number. Alright, fuel right here. Let's just make sure we're copying reference number, amount, update it because it brought the amount from last time. Okay, so what's happening here? Our debits and credits, right? We always want to remember those. Our expenses go up, right? Expenses go up when debited. What else is happening? Our credit card balance, and credit card is a liability, goes up. And liabilities go up when credited. So here it is, debits and credits are in balance. This amount right here, right? It is a debit to account 63,200, and this amount right here, right, it is a credit to account 21,100. Okay, next we have a cash deposit that we made, right? We got some money, cash money from our customers. We're going to deposit it. Okay, we're going to do it through our journal entries. We've done that before. All right, so again, okay, so we know our bank account will go up, and it is an asset, therefore it has to be debited. What else is happening? Well, the source of this money is our sales / revenue, therefore account 41,100 has to be credited. So here it is. Let's make sure we're reflected here. All right, assets go up when debited. All right, and sales / revenue go up when credited. Here it is, debits and credits are in balance. Again, on this interface, it's very easy to see. They're broken down for you right here. So save and new. Good. All right, what else we have? We have electronic funds transfer from our merchant account, right? So sales coming in, awesome. We like that part. Again, the way we would book it is through our journal entries. That's very easy. Okay, so make sure we change the date. All right, and that's our merchant. All right. Okay, so we know our bank account will go up, therefore it has to be debited. Alright, and we know that the source of this money is sales, so here it is. Alright, and let's make sure we're reflected here, even though we pretty much know it from this interface, very easy, but to solidify the knowledge. Okay. Okay, here it is. Debits and credits are in balance. They're in balance right here as well. Our sales go up, therefore they're credited. Our bank account balance goes up, therefore it is debited. We're good to go. Alright. And that concludes booking transactions in live mode for the month of November. After that, we'll go ahead and reconcile and make sure we did everything correctly.